What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL. But the charting method and the trading method that we use can be implemented with any company that's publicly traded in the US stock market. So make sure you hit that like button if you enjoy this video. Really helps the channel grow. Thanks to all those who continue to tune in. If you haven't already, make sure you hit that subscribe and notification buttons as well. That way you are alerted when we release new videos. We do release bonus content from time to time, and you definitely want to be notified when that occurs. Now, the video, like tonight's video, the nightly and weekend videos, we mostly identify triggers and targets for trades ranging from scalps and intraday trades all the way up to long-term swings and leaps. So if you want to know how we set up our charts, the broadening formations, levels of support and resistance, things of that nature, make sure you check out that bonus content. We've got a couple of videos that dive deeper into that as well. So go ahead and hang with us through the full video. We do go over triggers and targets, but we have some commentary about all the time frames, so make sure you hang with us through the full video. I'm sure you'll be glad that you do. Let's go ahead and check out the agenda for today. We'll go ahead and recap the price action from Tuesday, January 13th. We'll zoom out like we always do, look at the week, month, quarter, and year prices, and then we will zoom in to set our 4-hour markers and the triggers and targets for Wednesday, January 14th, and we'll review the triggers and targets for the week, month, quarter, and year as well. So if we get over here to the chart, we'll take a look at the 5 minutes like we always do at the beginning of our chart analysis. This gives us the opportunity to take advantage of the proven and repeatable strategy that we mentioned at the beginning of the video, right? So just to make it very simple, if you're not familiar with the channel, we look for higher lows at or above the opening print or the first traded price of the day. If we get higher lows at or above that opening print, we will look to get into calls targeting overnight high and previous high a day. If we get a lower high underneath or at the opening print, then we want to look to get into puts targeting overnight low and previous low a day. So we see here on the chart, we got the opening print here at 55.69. We pushed up, reject off this 161.8 fib of that holiday bull flag that we've been talking about for a few weeks now. If you're not familiar with this video, we'll check that out here in a second. If you're not familiar with the channel, we'll check that out here in a second when we zoom out a little bit more. But we did get the initial rejection off of that 161.8 fib. We pushed down and basically bounced off of the opening print, right? We got the higher low here, locked in by this candle that went above this 2 down, right? Now, if you wanted to, that would be for like a scalping, definitely on like a 1 to 5 minute perspective. Now, if you wanted to wait for the more solid higher low, you can see this candle here was the lowest of that down, right? And we pushed up, and it wasn't until this candle right here that we actually broke above the high of this 2 down. So that's where we really locked in the 2 down. And that's where we went ahead and entered today. We grabbed some calls for next week at the money, and we went ahead and just basically rode it. We did get a little bit of corrective activity or sideways action at the overnight high, which we guessed we would get. The spreads for SOXL right now are getting pretty spready, so we didn't have a stop limit set. It was more of a mental stop limit where we needed to manually pull the trigger to sell. This wick, we ended up not selling for the lower low because it happened so quickly, right? It pushed down very quick and pushed back up above the overnight high. So luckily, it was actually kind of lucky at that point that we didn't have a stop loss set here. So that was a bright spot for the day, because it was from there that we went to the highs of the day. Before falling back down. So hopefully you were able to stay in around this level as well. This was a level that you could have started to scale out of your position, especially if you entered on this higher low. But even if you entered on this higher low, that was technically the first target of the scalp move. So if you were scalping that small area, hopefully you were in the money, multiple contracts, and you were able to make a decent amount of profit there. Leave some runners and wait for that high. Now we went up and hit this 15-minute broadening formation, essentially, not to the cent, but once we saw this rejection and this big engulfing candle, all we had to do is wait for the lower high. And then once this candle went below the low of this higher low, we went ahead and exited, and we were able to get basically a little over $1 move there, right? So decent action there. We let go of most of our position. We did leave some runners, but you can see we had this lower high right here. Once we went lower low here, we went ahead and exited the rest of those runners. Not as much profit as the initial sell that we had, but it was still a profitable position at that point still. After that, kind of sat on our hands. We're waiting for another trigger, either to the upside or downside, frankly. And we never really got it. It just went sideways and kind of drifted towards the end of the day, and then bounced off of opening print to close just below overnight high in the end of the day. So another reason why we were kind of sitting on our hands at this point, if we look at let's go to the internals, right? Let's make this a little bigger for everyone. If we look at the market internals, or the internals for QQQ, they were just riding the zero line all day, a little bit below the zero line on breadth, right? So this was definitely no cause to be jumping into more calls, right? We essentially just took the higher low off of the proven strategy to get that entry in the scalp this morning, or the short day trade this morning. But there was no reason that we should be looking to get back into calls into the end of the day, right? We've got CPI tomorrow, so that could be weighing pretty heavily on the market as well. It could be a reason why we just went sideways in chips, and quite frankly, like big tech actually was pushing down more than chips. So we were able to get decent price action out of SOXL today, as opposed to like QQQ, which actually finished slightly red on the day. So just take advantage of what you can. Think about the other things that are going on around us, right? Today we had tomorrow we have CPI, so definitely make sure that you're on your toes for that. We had the inflation numbers this morning, and that could be just really why things petered out at the end of the day. If we look at like the 4-hour, let's go to a better chart here. We do need to kind of be on the lookout, just like yesterday. Set up a 3-2 up for a possible 3-2 up, 2 down. If we went down this morning off of inflation numbers, we still have this kind of situation for tomorrow with CPI numbers, right? We've just barely poked above this daily broadening formation, and that could be something that helps pull us back in. It also lines up with this 161.8 fib of the April 7th bull flag, that the bounce off of the low that we had last year. So we're coming to an area of resistance, and if we do get downside action tomorrow, obviously we've got the gap from this morning that would trigger this 2 up combo 2 up, 2 down, which would reach magnitude. Let me make this bigger. I keep forgetting to make this bigger for folks. Here we go. Yep. So if we go 2 down tomorrow in the first 4-hour, that gives us this 2-1, 2 down continuation, gap close. If we still have momentum, that gives us this combo 2 up, 2 down that would reach magnitude at the low of this candle. But we're still in that sticky situation with this 3, that if we go below this, that technically triggers this combo 2 up, 2 down, or 3 combo 2 up, 2 down. One of my favorite reversals, this 3, 2 up, 2 down. In this case, it's just combining a couple of candles as a 2 up before it would trigger the 2 down, and then the magnitude of that move is back at the week's opening print, right? So still plenty of room to go to the downside, especially if we get a bad CPI print tomorrow. And we would still be all right in terms of higher low, right? We've got a soft higher low here from Monday's action, the first 4-hour of Monday's price action, but the solid higher low is back down here around the $48 area. So we can still pull back, retest last week's 50% level. We talk about that all the time on this channel, is testing the previous week's 50% level, seeing what type of reaction we get there. Do we get a bounce? Do we just go sideways? Do we fall through? We've talked about what each of those mean, but it'd be perfectly reasonable, especially with a hot CPI print, for us to push to the downside tomorrow. Maybe test last week's 50% tomorrow, maybe even into Thursday, before maybe getting a bounce and just continuing this uptrend. We've got this big gap up here at 60 to 62, so definitely got a magnet here, but we do technically still have a gap from here. It is. What was this last? I can't remember what it was, but last Friday or Monday, I believe. I'm sorry, last Monday or the previous Friday, I believe. We still have this gap that we didn't quite fully close. So we do still have that out there that we need to look for when we talk about gaps being magnets, right? We've got the immediate gap here. We've got the gap from a couple of weeks ago, and then another gap below. So could we see sideways action in between all of these gaps? Yeah, we could see that as well. But at this point, especially finishing with this red inside candle today in the 4 hour, it's just showing indecision, and we're going to have to be patient, right? That's what we do on this channel. We don't make predictions. We just set up triggers and targets for both sides of the equation, and whichever side triggers, we go with it. So that's what we'll continue to do. If we look at the 1 day chart, again, from just a strictly candle perspective, just looking at the individual candle, it's not, neutral to bullish leaning is what I'll call it, right? It's an inverted hammer, which technically would be more bearish leaning, but it is a green inverted hammer. So we did still close above where we opened. In the strat community, we would call this a Momo shooter or a momentum shooter. It's a shooter or an inverted hammer in the midst of an uptrend, right? So if we go 2 up tomorrow, then this just looks like a Momo shooter. And like I said, we closed higher than we opened. So even though it is an inverted hammer individual candle, I would lean more bullish than bearish in this case, right? So we did get the 2 up, continuing this uptrend. But again, we've still got plenty of room that we can pull back to set a higher low. There's no reason why testing the week's opening print or last week's 50% level should cause any cause for alarm, right? Or give any cause for alarm, right? So we would just, play it to the downside, make some, scalps and intraday plays to the downside, take advantage of that, and then just be ready to capitalize on pullbacks and pullback longs and take them in that direction, looking for that gap close. And, we're really close to that, the strat completion on the, quarter and the year as well, which is up here at 70.08. So not too far to go to complete that, and I would not be surprised to see us do that, the rest in this first quarter. All right, so that's what we've got from today's price action. Not a whole lot to say. We're just continuing the move to the upside in a little bit more of a grindy day than it was the past couple of days, but still continuing to push up. Let's take a look at the week chart. Zoom out a little bit here, and we can see, right, just still making higher highs. We're not even back in the previous week's price action, so that continues to remain bullish, right? So we've got a higher low when it comes to candle to candle, and we've got a higher high candle to candle. So coming off of this higher low here, we're just still in this uptrend. Yeah, not a whole lot to say. It's kind of the same thing that we've been saying for a while, and what we just got done saying on the day chart. The month, right? We kicked off this. Let's get a better chart here. Kicked off this 2-1-2 up, locking in November as a higher low on the month chart, going above October's high, so giving us a higher high, starting an uptrend, right? Higher low, higher high, that starts an uptrend. Again, no immediate magnitude, strat reversal or strat continuation magnitude that we would reach on the month chart, but that's fine, because if we go to the quarter, we're in this 1 combo 2 down, combo 2 up, right? Triggered above the high of this first 2 down after the 1, and the magnitude is the high of the candle to the left of the 1. So that's that 70.08 that we were talking about. That's the ultimate goal there on the quarter for that strat reversal. And then if we look at the year, we've got a very clean 2 down, 2 up that's triggered, and the magnitude of that is 70.08 as well. So 70.08 looks to be that magic number, and as long as we're above, 50.76 from the year perspective, we're still in the strat reversal. We're still in force, and then technically we can go as low as 36.15 before we have totally reversed or no longer in force in the quarter strat, right? So we're still in good shape, and it's going to take a little bit of patience, right? There's nothing. I don't want to get into predictions. I've had a couple of questions as far as like timelines and things of that nature. I am bullish leaning until we see something trigger to the downside with any real significance, right? So from the week on up, really the day on up, everything is bullish. Now that doesn't mean you go out and just start buying new contracts, right? You have to pick and choose your spots. You want to be buying at highs, hoping that we just continue to move higher. If you do that, then we can always have a pullback. And even though that's not the worst thing in the world, now you've got a bad entry, right? So wait for those pullbacks. It may take some patience. It may take a couple of days, but as long as we've still got these uptrends intact from the day, the week, the month, quarter, and the year, there's no reason to be bearish over here. So, that's how we feel about this. And I guess at this point, let's get into the 5-minute chart again, so we can start talking about tomorrow's trading. So there we go. Oops, not today, tomorrow. All right, so got the 5-minute up for tomorrow's trading, and we can see the 4-hour markers here on the chart. Actually, we need to get the overnight low. Where's the overnight low? There we go. Let's activate this, and let's just give it a hypothetical overnight low. All right, there we go. So we've got our 4-hour markers, right? That's previous high of day up here at the top, overnight high, overnight low, and previous low of day, right? Those are the first 4 that we can get. Now the next one we have to wait for price to actually start trading, and that's the opening print. So let's just say price opens somewhere in between, the overnight range, and we get a push up and maybe reject off of the overnight high and pull back, but we get a higher low at or above that opening print level. Okay, we want to look to get into calls. Overnight high would probably be too small or too close of a target for us, even if you got the best entry right at opening print in this example, that is. So scaling out at overnight high, probably not, but maybe choose one of those other major levels on the way to the previous high of day that you might want to scale out a little bit, right? That's 161.8 fib extension of the holiday bull flag. Let me just pull back out because I said I would show that, but I didn't show it. Let's go to the day chart. If we look at, let's get our swing chart. There we go. If we look at the holidays, right? This was back in November. Let's get the day chart so we can tell exactly what days it was. I forgot the exact days. I think it was the 19th. No, 17th was down here. So if we look at things from the 4-hour perspective, make it a little bigger here so everybody can see. We can see we had this low down here on the 17th. Then we shot out and went sideways, right? So to me, just looking at it, high level perspective, looks bull flaggish, right? So here's the flag pull. Here's the flag, and we've got our fib extensions from that. And you can see that we've done something at each one of those levels. So why would this level be any different, right? Or the 161.8 fib, right? So if we go back to the 5-minute and let's get to our scalp chart. All right, so let's take the example that we have on the chart here. Oops, where's our previous? There we go. Right, so if we open, we push up, and we reject off of overnight high, but we get a higher low, and we enter. Again, overnight high is probably too close of a target. Maybe you take it up to this 161.8 fib. You can see if you look to the left, level of resistance right there. A little bit of support there. Level of resistance, little resistance. So that could be, one of your scale out levels instead of looking at the overnight high. You can also look at this 161.8 fib of the April 7th low bull flag, right? That could also be another place where you scale out. But the ultimate target for that trade would be previous high of day, right? On the reverse side, if we open and we push down, maybe we get a little bounce off of overnight low, but then ultimately get a lower high at or below the opening print. We want to look to get into puts. Same type of thing. If overnight low is right here, might be a little too close. You might want to just wait and take it to previous low a day, right? Maybe leave a runner for the gap close, but previous low a day, for all intents and purposes for this strategy, that would be the ultimate target for that, quick scalp. It's up to you, your risk reward, your position, your expiration date, strike price, things of that nature to it's up to you to know whether you want to, let that run and see if it can turn into a full day trade, right? And now you've got an early entry into a day trade that you can let run and really start to cook up, or even swing it longer depending on what your expiration and whatnot are. So that's how we would play that, right? Look for the opening print, look for a higher low at or above opening print to get into calls, look for a lower high at or below opening print to get into puts, right? Now let's go to the 4 hour and look for more of a more traditional day trade, maybe overnight scalp even, but more of a full day trade, right? If we look at it from the strat perspective, we have a 2-1 from Tuesday's price action, leaving a 2-1, 2 down possibility on the board, as well as a 2-1, 2 up possibility, right? With that inside candle, it just really shows indecision. Now, if we go to the downside, just for this strat right here, the 2-1, 2 down, the entry is obviously the low of the 1, and the exit is the low of the 2 to the left of the 1. So not a lot of barely anything there, but right? Now you do have the gap below it, as well as if we do fill the gap and continue, you would then trigger this combo 2 up, combo 2 down, and the magnitude of that move would be the low of this candle testing the high of last week, which I could definitely see as a possible bounce point, right? Now, if we go to the upside, that triggers that 2-1, 2 up to the upside, obviously entering at the high of the 1 and exiting at the high of the 2, or Tuesday's high, right? Again, to the downside, there is kind of a domino effect that can take place. If we get that combo 2 up, combo 2 down, it reaches magnitude and continues to push down. Now we're in this 3 combo 2 up, 2 down reversal, and the magnitude of that move is back at the opening print of the week, right? So much bigger move if we do get that domino price action to the downside. At the same time, last week's high, the 138.2 and 123.6 fib of the holiday bull flag will act as support. Again, we got CPI, so hot CPI could be what drives us through those levels of support. You just got to wait and be patient, all right? Go to the day chart. All right, again, we had that inverted hammer from Tuesday's price action. Now, it was green, so it's perfectly reasonable to think that we can continue to push to the upside. We've got the gap up above, and it would just be a 2 up, 2 up continuation, right? At that point, you've just got to manage risk to reward. Now, if we go to the downside, that does trigger a 2 up, 2 down, triggering at the low of Tuesday, and the magnitude is the low of Monday, right? The candle to the left of the 2 up. So that gives you a lot more room to the downside of actual, solid entry and exit, right? If you go to the upside, yeah, we've got an entry, but I'm kind of just guessing at exits at that point. You've really got to just monitor price action and look for, are you getting higher lows and higher highs or lower highs on, an hour time frame, something of that nature of your own rules of why you want to get out. With the strat reversal, it's easy, right? There's the entry, there's the exit. Now, it is to the downside. We're in an uptrend, so you have to take that into account too. So you have to realize you may not always reach magnitude if you're going in the opposite direction, right? If we look at the upper left-hand part of the chart, you can see the day, week, month, quarter, and year all green. So full time frame continuity to the upside. Momentum is really with the bulls. I don't really, it's been the same type of situation for days now, right? We just get those 2 up, 2 up, 2 up. If we get that 2 down, watch for that to be the higher low because we are in an uptrend. But that's really nothing new to say there. Let's go to the notes so we can look at some hard numbers here, right? Wednesday, January 14th, there will be 243 trading days left in 2026. The close price on Tuesday, January 13th was 56.07, and we know that the week turns red at 52.39, as well as the month, quarter, and year turning red at 45.13. We know the week's expected move from the market makers is plus or minus $5.62. If you're not familiar with that, check out our weekend video where we go in deeper dive into that, giving us a range of 59.57 or expected range of 59.57 to 48.33. So far, we have stayed within that range. We know that we do have the gap above from 59.30 to 62.23, but we also have the gap from today as well as previous gaps below that could act as magnets. We want to always keep those in our notes so we know where they're at. From a scalping perspective or an early entry perspective for a day trade, swing trade, we want to look for higher lows at or above opening print to get into calls, and we want to look for lower highs at or below opening print to get into puts. From the 4-hour perspective, we talked about to the downside, we could have a 2-1-2 down trigger. Not a big magnitude there. You can see triggering at 55.57, magnitude being 55.43, but there is that domino effect, snowball effect, whatever you want to call it, with triggers with the combo 2 up, combo 2 down, and the 3 combo 2 up, combo 2 down that would take us to the downside. Targets being 55.15 and 54.64. Now, if we go to the upside, a little bit more room on just the 4-hour strat itself. 56.69 being the trigger, 57.63 being the target, being almost a dollar move. If we continue momentum to the upside, we do have 58.04 as an extended target. Now, on the day chart, if we go to the downside, right, that obviously triggering the 4-hour and reaching its magnitude of the 4-hour being 55.43. If we reach 55.43, that triggers the 2 up, 2 down on the day with a magnitude of 52.35. Again, we talked about we are in an uptrend, so we do see a possible bounce point at 54.42, but the magnitude is ultimately 52.35. If we get a hot CPI print or something that really kicks off that domino effect that we were talking about, we've got an extended target of 51.45 out there for tomorrow. Now, if we go to the upside, again, it's just a 2 up continuation, triggering at 57.63. No magnitude on that move because it's not a reversal, it's just a continuation. So we've got extended targets of 58.62, 59.57, and 61.22 as your extended targets. We'll stay on the notes, not go back to the charts. We've gone over the charts enough today, I think. On the week is green. We've triggered the 2 up at 54.76. So as long as we are above 54.76, we're still in force in that 2 up. And we've got extended targets of 56.92, 59.57, 62.23, and so on to the upside should we gain more momentum. To the downside, we'd have to get all the way down here to this 48.13 to trigger the red 3 or the bearish engulfing candle. So not worried about that right now. We'll talk about it more if we start getting closer to that level. On the month, we talked about triggering the 2-1-2 up at 50.09, reaching magnitude of 50.19, which locked November in as a higher low. We got above that 50.19, which gave us a higher high as well. So we continue the uptrend on the month chart, and we've got the targets here: 62.23, 63.95, and 65.04. If we do get up to that 65.04 to the 69 or 63 level, really, we'll start adding some more extended targets, but we just want to see where things take us. Don't want to get too far ahead of our skis, but we do know that 70.08 is that magic number, which brings us to the quarter where we have triggered the 1 combo 2 down, combo 2 up at 50.76. Targets on the way up to the magnitude are 62.23, 65.04, and 67.56, but the ultimate magnitude for that move is 70.08, which ties directly into the year, which triggered a 2 down, 2 up early in the year at 50.76, and the magnitude of that move is 70.08. All right. So there you have it. Those are your triggers and targets for everything from a scalping perspective up to the 1-year chart. I hope everybody has enjoyed today's video and got some good information from it. We tried to jam as much information in as without taking up too much of your time. So hopefully we have achieved that. Definitely give us a thumbs up if you enjoyed the video. It's free. The video is free, so hopefully that's a nice exchange that we can make there. Free video for a free thumbs up. But really, if you have any comments or questions, please leave them in the comments. We do respond to people's comments and questions, and we change the videos as necessary for our audience, right? So especially if more than one person has requested something, we go ahead and try and implement that into our videos. We've already done that with a few things, so hopefully the videos have continued to get better for everyone. And but the most important thing is that you're getting some good information from it, and that's all we're hoping for. So again, thumbs up goes a long way, and we hope you enjoyed today's video. We'll go ahead and close it here like we normally do. If you're watching this Tuesday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you're watching this Wednesday morning or Wednesday during the day, we hope you got some good rest last night and woke up refreshed this morning, and we look forward to getting out there and trading with you.